Hello folks, Hector the Bill here. In this video today we are going to be reviewing the London Open Breakout strategy, which is actually one of my favorite Forex strategies, and especially if you are 100% focused on intraday trading, you're going to love this strategy. Trust me if I say that if you master the London Open Breakout technique, you can base your entire intraday trading approach onto this particular strategy. All right. Well, first of all, obviously we need to get going with the definition. All right, and as its own name indicates, we are going to be basing our trading decisions around the London Market Open, which for all of you who don't know, well, the London Market opens at 3 a.m. Eastern Standard Time, or what's the same, 9 a.m. Central European Time. Let me pause the video just 1 second. Okay, here we are. As you can see, I've marked the opening times for the different major markets in the world. These times, by the way, are all based in Eastern Standard Time. In case you want to translate these times, market opening times, into your own world time zone, you can find an interesting link right under this video that's going to help you in that regard. Okay, so Tokyo opens up at 7 p.m. Eastern Standard Time, Frankfurt opens at 2 a.m. Eastern Standard Time, London at 3 a.m., and then, the last one to open is actually New York at 8 a.m. Okay, Wall Street opens at 8 a.m. We could also include Sydney, which opens just a little bit before Tokyo, all right, somewhere in there. But at any rate, like I say, this London Open Breakout strategy is based on Tokyo, Frankfurt, and London. We don't even need to include New York in the equation. All right. So, why are we going to be focusing only in these three world markets? Well, because at this time between 2 and 3 a.m. Eastern Standard Time, all three are going to be working. Actually, more. Around 3 a.m., all three markets are going to be working at the same time. Tokyo, as I said before, opens at 7 p.m. and it remains open more or less until the London market actually opens up, or wakes up in the morning, right? So around that time, again, we have three major world markets working at the same time. Now, what does that mean? Well, it means that the market volatility, the market volume, right, the trading volume at that precise time is going to be rather high. In the same way as between 8 a.m. and 10, 11 a.m. Eastern Standard Time, the market volatility also increases because we have two major world markets working together, New York and London. London spans from 3 a.m. until 10 to 11 a.m. Eastern Standard Time. So at that time, market volume increases since we have both London and New York, punching their trading tickets into the market. Same phenomenon here. London, Frankfurt, and Tokyo working at the same time. Tokyo is closing out their trades, okay, their open trades that they've kept open throughout the night. Well, at this time, they are again reversing their positions just to call it a day, okay? Whereas, on the other hand, Frankfurt and London, all the Frankfurt-based or London-based traders are actually punching in, sitting at their respective trading desks and sending their trading tickets into the market early in the morning, right? So at that time, if the trading volume, let's assume it goes something like that, well, at this precise time, bang, the trading volume goes up. Then it goes down as the London market, winds down, and again, at the New York market open, bang, it goes up once again. All right, so this volume increase, okay, that volume spike is what we are going to be basing, or actually what the London Open Breakout strategy is going to be basing the trading signals on. All right, the London Open Breakout strategy is entirely based on this volume spike that we usually see at that time, 3 a.m. Eastern Standard Time. So how does that translate or affect your actual forex charts? Well, usually around that time, 2-3 a.m. Eastern Standard Time, you usually see price on some particular currency pairs that we are going to be listing in a minute. Well, on that in those particular currency pairs, you usually see price accelerating at that precise time. All right, either to the upside or to the downside. Of course, you never know. But at any rate, we are going to see a price acceleration around that time of the day, and that's exactly what we are going to be profiting on. All right, on that early morning swing, that early morning move that we see on some currency pairs as the European markets, both Frankfurt and London, open up. Okay, as Tokyo gives way to the European markets on some particular currency pairs, as a hint, I will tell you that they are European-based currency pairs, meaning euro crosses or sterling pound crosses. Well, those currency pairs usually wake up at that time and price accelerates. Again, that's what you're gonna be ready for, right? That's exactly the type of move we are gonna be searching for in order to capitalize again on those early morning swings. Now, as I just mentioned a minute ago, the currency pairs you want to trade under this strategy are obviously European-based currencies, correct? I mean, please remember that Frankfurt and London are the world markets that are gonna be driving this forex strategy. Okay, the Frankfurt-based traders and London-based traders are the people, the traders, who make this strategy feasible. All right. And obviously, most of their trading volume is going to go into European crosses. Okay, just makes sense. So please only take trades based on the London Open breakout strategy on euro crosses. All right, the euro against the American dollar, the euro against the Japanese yen, the euro against the Australian dollar, etc., or sterling pound crosses. Sterling pound against the American dollar, sterling pound against the Swiss franc, sterling pound against the Australian dollar, the Japanese yen, etc., Only search for trades based on this strategy on either euro crosses or sterling pound crosses, with just two exceptions. All right, two exceptions. You don't want to trade the euro against the sterling pound or the euro against the Swiss franc. These two currency pairs just don't have the volatility, just don't have the punch enough to trade or to be traded using this strategy. Actually, if you calculate the average daily range for either of these two currency pairs, you will see that it's much tighter, much smaller than on any other currency pair across the board. Okay, so they're just too quiet. So you don't want to trade the London Open breakout on either of these two currencies. This strategy is entirely based on momentum. Okay, this is a momentum strategy. Remember what I was telling you guys before. This strategy is based on that volatility spike we see around the London Open. Okay, and therefore we need volatility. Obviously, you don't want to search for trades on, for example, the dollar against the Canadian dollar, since either the American dollar or the Canadian dollar, well, none of them is actually based around, the European economies, right? So you don't want to trade that, okay? Okay, let's move on with the presentation with the actual setup, all right? The trading opportunity in itself. What are the pre-entry requirements we are going to need in order to, signal a London Open breakout or to flag a London Open breakout as a valid breakout or a non-valid breakout? Basically, what we are going to be searching before actually taking the trade. Okay, the pre-entry requirements. Okay, here we are with the requirements. 4 of them, as you can see on my screen. Let's get going with the first one. Intra-week trend. You must have, okay, I can't stress this enough, guys, you must have an intra-week trend. As I was mentioning on a previous video, intraday trading has a very short memory span. Please don't scroll back 10 days in your charts. You don't need a juggernaut of a trend throughout the last, 6, 7, 8 days in a row. You don't need that, guys. You don't need that. Just the last 2 days. All right, let's round it up to 2 days. If you have 2 days more or less, marking an established trend, more or less a clear trend, you are good to go. Okay, that's a valid intra-week trend. Again, intraday trading, short memory span, 2 days, more than enough. That's an intra-week trend. So you can use the daily box indicator. All right. So if as per the last 2 days you see the daily box indicator printing, for example, 2 purple boxes, then that means, well, as of lately, from an intraday point of view, we've been uptrending. If they are red, I mean the daily boxes are the individual daily boxes are red, well, then we've been downtrending. That's good enough. You are good to go to search as soon as the London market opens the next time around. You are good to go to search for either continuation moves or reversal moves. I've already mentioned this on the previous video, guys. Just the fact that we have a trend doesn't mean we are gonna trade in the direction of the trend. All right, we can trade continuation moves or reversal moves, but at the end of the day, if there is no trend, there is no reference in our charts. Okay, no structure on our charts in order to search for our next trade, right? So assuming we do indeed have that intra-week trend, then we need to take a look into the Tokyo range in itself, the nature of the Tokyo range. What you want to do is to simply box the Tokyo range price action, for example, from 7 p.m. Eastern Standard Time until 3 a.m. Eastern Standard Time, and simply mark the low. Let's assume, let me clean that up. Let's assume the Tokyo market opens up there and the London market opens up there. Again, 2 or 3 a.m. Eastern Standard Time, around there. All right. Okay, price has been moving, all right, like that. And what you want to do is to mark or to box price action between 7 and 2 or 3 a.m. Eastern Standard Time. Just mark the high and mark the low of the Tokyo range. The ideal Tokyo range, as far as the London Open breakout strategy, is to have a tight and sideways Tokyo range. Basically, what you want to see is price ranging, moving sideways, not trending, guys. You don't want price to be trending throughout Tokyo, okay? You want price to be flapping sideways, up and down throughout Tokyo range, so you can clearly define the high and the low. All right, the tighter the Tokyo range is, the better. How tight is tighter? Or I don't know how to express that in English, but how tight is tight enough? Well, you can use the average daily range indicator for that. Remember the average daily range, the ADR bands, right, in which you would mark, or the indicator actually would mark the 100% bands, then the 70% bands, and finally the 50% bands. Okay, do you remember that? Well, you want price throughout Tokyo, throughout the entire Tokyo, to be entrapped within the inner bands, okay, within the actual 50% bands. All right, so if that's the 50% bands, you want price from 7 p.m. Eastern Standard Time all the way until the open of London or Frankfurt, 3 a.m. Eastern Standard Time. You want price to be contained all Tokyo long, okay, all throughout Tokyo within those 50% bands. All right. Again, why am I stressing this so much? Why am I stressing that you need the tight and sideways Tokyo range? Because please remember the nature of this strategy. This is a momentum-based strategy based on a price spike upon the London market opening time. So what you want to see is price being rather sleepy, all right, rather quiet throughout the night, throughout the Tokyo session. So once the London volume kicks in the market, bang, we see a wake-up call, all right. London traders slapping price alive. Price, begins to accelerate in one direction, and so we can jump on board, as soon as possible, early in the morning, bang, and ride that momentum move, that momentum swing for profits, for quick profits. So, in order to have that wake-up call, price, by definition, needs to be quiet throughout the night, okay? Sideways range, London London market opens, the volume kicks in the market, bang, price wakes up. That's what we need. If, on the other hand, price had already been trending, okay, moving clearly in one direction, once the London market opens up, we are not going to get that wake-up call effect, because price had already been, moving. Price had not been quiet, had not been sleepy, had not been flapping sideways. Price had already been moving. So we are not going to be able to get exactly the same wake-up call either to the downside or to the upside or to the downside. At any rate, price must be quiet in order to accelerate. If price is already accelerating in one direction, well, we cannot search or we cannot profit from the acceleration up on the acceleration, right? I hope I'm driving the point home here. So again, very important requirement: tight sideways range, price entrapped within the entire Tokyo range, between the 50% ADR bands, and also, please, it's important to have the high and the low clearly marked, clearly definable on your chart. The better you can define the high and the low for the Tokyo range, the easier, once London market opens, all right, the easier for us is going to be searching for the breakout, either to the upside again, price, or waiting for price to break through the upper band, or to the downside, price breaking through the lower band of the Tokyo range. Like I say, the clearer we can define that lower and upper band for the price action throughout the Tokyo range, the better. Again, because once price breaks through or price breaks away from the Tokyo range, we are going to be able to define that breakout point, much more accurately. Okay? All right, now, next requirement: the location of the Tokyo range as per the previous day's range. Now, I know that sounds like a whole mouthful. Don't worry, this is actually easier to understand than it looks like. All right, we need the Tokyo range to be located at the extremes of the previous day's range. Again, you can use the daily box indicator for that. Now, let's assume the previous days, okay, let's assume I am to trade, or I'm searching for a London Open breakout type of setup, okay? So I would look into yesterday's price action. Again, you can use the daily box indicator for that, and let's assume we get, this is the daily box for yesterday. Let's assume it's a purple box, meaning it's been an up day, or yesterday was an up day. Okay, the Tokyo market opens up there. All right, we want to see the Tokyo range at the extreme location of the previous day's range. You want the Tokyo range to be located either there. Again, please remember that we wanted a sideways price action. Price had been moving, let's assume, up yesterday. Then, well, this is the end for the day for yesterday's trading session. This is the Tokyo range. The London market opens somewhere around there. That's 3 a.m. Eastern Standard Time. Well, we want that Tokyo range to be located at the extreme, okay, at the extreme end of yesterday's day. Also, if it was a down day, well, we would be obviously looking to see the Tokyo range at the other extreme of the previous day's range. Okay, we want price here. In the other hand, if the Tokyo range happened somewhere in there, in the middle area of the previous day's range, that's a trade we are not going to take. That's not the location we are interested in. Let me clean up my chart a little bit. Previous day's range. Price had been moving yesterday, something like that. And the Tokyo session begins at 7 p.m. Eastern Standard Time. And if it ranges at the middle area of the previous day's range, you don't want to take that trade. That's a no-go. Why is that? Why am I, well, why would I discard a setup altogether just based on the location of the Tokyo range as per the previous day's range? Well, here's why. Please remember the first requirement: we need an intra-week trend in order to search, let's assume an uptrend throughout the last 2 days, in order to search for either up moves, continuation moves, or reversal moves. All right, we are going to be trading either continuation or reversal moves. However, if price is located in the middle part of the previous day's range, how could we define whether we are going to be taking either continuations or reversals if price is already entrapped in the middle of nowhere? All right, in order to trade a continuation or a reversal, you need price at the, assuming an uptrend, at the extreme band. Okay, so we can indeed search for continuation moves for another up day, or reversal moves for a down day. Okay, for a reversal day, probably aiming the low of the previous day range. Okay, somewhere in here. But at any rate, we need the location of the Tokyo range to be, the Tokyo range to be located at the extreme in order to define whether we want to be trading, again, a continuation or a reversal. If price is already at a no man's land, meaning in the middle of nowhere, in the middle of the previous day's range, well, we cannot search for either continuation or reversals, can we? Because price is already at a very awkward location. In order to search for continuations or reversals, price needs to be located at the extreme of the previous day's range. All right. Now, I know this may sound a little bit too theoretical. In a minute, guys, I'm going to show you some real life charts. Okay. So don't you worry. Just follow me along here, just for a little bit longer. Okay. And now, finally, the last requirement: early morning breakout. We need the breakout to happen early in the morning. Why? Again, I must repeat myself. This is a momentum-based, a momentum-filled strategy. If there is no momentum, if there is no volatility, then we cannot trade London Open breakouts. Well, in order to gauge whether the Frankfurt and the London session are going to be an active session, we want price to get kicking, to get moving very early in the morning. All right, if price up on the London market opens up again 3 a.m. in the morning Eastern Standard Time, price remains stagnant, price remains moving sideways. If this is the Tokyo range, that's the beginning of Tokyo, that's when London opens up in the morning. Well, if by the time the London market opens, by the time we are supposed to get that increase in volatility, by the time we are supposed to see that momentum punch into the market, price actually simply continues to flap sideways, what conclusion can we draw? Well, we can kind of think that this is going to be a quiet day, isn't it? And we cannot profit from quiet days. Please remember what I said on an earlier video. If we want to become intraday traders, successful intraday traders, we need price to be moving. We cannot make money in stagnant markets. If we are to make money, price needs to be alive, it needs to be kicking, either to the upside or to the downside, but at any rate, price needs to move somewhere. If price continues to flap sideways, it's impossible to make money, correct? So what we want to see is, just as the London market opens up, we want to see the breakout, an early morning momentum breakout. So between 3 and 4 in the morning, okay, like I said, within the first hour of the London market opening up, we want to see price moving away from the Tokyo range. This is crucial, guys. This is crucial. I cannot distress enough, or I could, but then I would be yelling, shouting, and that's certainly not what I want to do on this video. So you want to see those early morning breakouts. That's 2, 3 a.m. Okay, 2, 3 a.m. Eastern Standard Time. That's the Tokyo range, all the way up to 3 a.m. well, immediately up on the London market to open its doors, you want price to move away from the Tokyo lower or higher boundary. You want price to move away as soon as possible. I would give it 1 hour. All right, 1 hour and a half if you want to stretch it. If you want to give it a chance, but again, you want to see price breaking through the Tokyo bands as soon as possible in the morning up on the London market opening up at 3 a.m. All right. What if price doesn't? Okay. What if price? This is the Tokyo range. Early in the morning, the London Open breakout. Well, what if price upon the London Opens? Well, price simply remains entrapped within the upper and lower band of the Tokyo range. Well, just simply search for trading opportunities somewhere else. This is not going to be, or this is an early signal of warning, a signal that today's London session is going to be a quiet one and you don't want to trade quiet sessions. Again, intraday traders require active sessions in order to make money. You don't want to trade in quiet sessions, so just move away, search for trading opportunities somewhere else, or simply close out your trading station for the day. There's nothing wrong in not taking trades whenever the market conditions are just not there. All right. So if you don't get the breakout very early in the morning, you want to focus your attention somewhere else. All right, now that we've seen all these 4 pre-entry requirements, I am aware that this video has been a little bit difficult to digest, a little bit hard to chew through. So what we are going to do is we are going to look into some charts, some actual Forex charts, so you guys can have a visual idea of what these 4 requirements actually look like on a real Forex chart. Okay, don't you worry, now that we are going to be seeing some live examples, you will see how easily you can recognize a valid London Open breakout setup. Alright, well, here we are with the sterling pound against the American dollar. Please remember that any sterling pound cross, any sterling pound or euro cross is okay to search for trading opportunities as per this strategy, okay? And well, we are looking into the 1 hour time frame right now. The reason for that is because the 1 hour time frame is what I call the setup chart for this particular trading strategy. That means that the chart analysis process is going to be conducted on the 1 hour time frame. Now we are only going to be zooming into the 15 minutes time frame or the 5 minutes time frame if you so prefer, when it comes to enter the trade. But again, the actual analysis, the actual setup, or actually spotting the setup as a whole, is going to be done on the 1 hour time frame. So as you can see, this is live current market price. Okay, this is a live chart. This is what's been going on today. So let's see whether we had a trading opportunity, a valid London Open breakout trading opportunity this morning or not. But before we get started, I'd like to prove the impact of the London market. Okay, that trading volume increase that I was mentioning before. This is, each of these days, as you can see, as per the daily box indicator, is 1 day worth of price action. Okay, this is the beginning of the Tokyo session, and 3 a.m. Actually, let me. Yeah, 3 a.m. actually happens. Just a second. Right there. This is 3 a.m. Eastern Standard Time. This is the beginning of the day, the beginning of the Tokyo session, and this is 3 a.m. Eastern Standard Time. Take a look at the momentum punch, the price spike we saw immediately after the London market opened up early in the morning. Okay, massive momentum move for just 2 hourly candles. Okay, that means 2 hours worth of price action. Price, rocketed to the upside. Let's take a look at what happened the next day over. This is the beginning of the day. All right. 1, 2, 3, 4, 5, 6, 7, 8. Right there. It's 3 a.m. Eastern Standard Time. This is the beginning of the Tokyo session, which spans for 8 hours. This is the open on the London session. Take a look at what happens. Massive momentum, massive price drop within 2 hours. Price dropping. Actually, let me give you the exact number. From 161.50 to 160.27. So that's over 120 pips within 2 hours. Again, 120 pips within 2 hours. That's exactly the type of momentum move you want to profit from. All right? What about today? Well, same thing. The Tokyo market opens up there. 1, 2, 3, 4, 5, 6, 7, 8. This is 3 a.m. Eastern Standard Time. Market acceleration, guys. Within 2 hours, price moved, well, from there, 159.58, 160.61. 105 pips within 2 hours. All right? Whoops, 2 hours. Again, prototypical London open market reaction, price reaction. Tokyo, the Tokyo box, early morning acceleration. Tokyo box, early morning acceleration. Tokyo box, early morning acceleration. Do you see now why the London market, the London open breakout strategy can be so profitable? All right. Do you see now the potential of this forex strategy? How you can make up to 100 pips in like 2 hours? Okay, very early in the morning. That's why at the beginning of this presentation I was saying that if you master the London Open breakout strategy, you can base your entire intraday trading approach onto this particular technique. Okay. Anyway, let's focus on today's price action. Okay. Let's see whether we got a valid London Open breakout set up this morning. All right, let's recap a little bit the 4 requirements. We had to have an intra-week trend as per the last 2 days. We had to have a tight and sideways Tokyo range. We had to have the Tokyo range located at an extreme of the previous day's range, and finally we had to have an early morning breakout, within the first 1 or 2 hours upon the London market open. Okay, so let's see if we actually have that. First of all, do we have an intraday trend? Okay, please remember that this is the beginning of today's Tokyo session, and this is the beginning of this morning's London session. So as per the last few days, let's assume at the time of recording this video was right there, okay? As the London market was opening, let's analyze this chart. What about, do we have an intra-week trend? Yes, we do, okay? 2 days in a row with red color daily boxes. So yes, we do have an intra-week trend. Second requirement: do we have a tight and sideways price action throughout the Tokyo range? This is the Tokyo range. Actually, let me zoom in a little bit more for a clearer picture. This is the beginning of the Tokyo session. This is the end of the Tokyo session. So we mark the high, which is right there. All right. We basically box the Tokyo session in itself. Right there. Whoops. Right there. More or less tight and more or less sideways. Do you see that? How price had not been trending. Okay. This is the beginning of the Tokyo session, and this is beginning and the close. All right, so more or less moving sideways, more or less tight. Okay, so certainly we can search for a breakout. All right, for a breakout early in the morning. Okay, so yeah, this is a valid Tokyo range. All right, as per our requirements. Third, where is this Tokyo range located as per the previous day's range? This is the previous day's range. Okay, again, you can use the daily box to identify, okay, to visualize the previous day's box. Where is the range, the Tokyo range? Is it here? Is it somewhere in the mid area of the previous day's range? No, it's not. It's located at a extreme, okay, near the low of yesterday's of yesterday's trading range. This is yesterday's trading range, and as you can see, well, the Tokyo range is located at the extreme. So that's another requirement that's been fulfilled. And finally, as I was saying before, do we get the breakout early in the morning as the London market opens up? Yes, we do. This is the beginning of Tokyo. This is the end of Tokyo. Within the first bar, okay, within the first hourly bar up on the London market open this morning, we got the breakout. So yes, this would be indeed a valid London Open setup. Okay, we would indeed be interested early in the morning to search for trades on this particular setup, okay, on this particular currency pair. Please mind how this has been a reversal move. Okay, we do have our trend, okay, our intra-week trend, then we spot the Tokyo range there. And as I was mentioning before, we can get both continuation or reversal breakouts. This time around, today, we got a reversal breakout. I'm glad I picked this example, or that, well, we saw this type of price action this morning, just to prove you guys that we don't always have to trade in the direction of the trend, okay? It's not necessary. We can indeed trade reversal moves as long as we have a trend to reverse from, all right? So I'm rather glad I picked this example today. All right, now I'm gonna pick another example. Also, again, current market price. Okay, live chart. This time around, euro against the Japanese yen, so a valid London Open breakout currency pair. You know, a nice candidate. Also on the 1 hour time frame. Okay. First of all, the requirements. 4 requirements. Do we have an intra-week trend as per the last couple of days? Please, by the way, remember that the London market opened somewhere in there. All right, somewhere in there. As you can see, we did get the momentum breakout. Okay, massive bang, massive candle in the 1 hour time frame. Okay. Do we get the? Do we have an intra-week trend? At that time, well, as per the last 2 days, we have a red day and a green day, or a purple box. Okay, so we have an up day and then a down day. Not really an intraday, an intra-week trend. We have 1 day. I mean, the previous day was red, but the day before was purple. So, up day, down day, not really a clear trend. Now, second requirement, do we have a tight Tokyo range? Let me zoom in a little bit more. There. Do we have a tight Tokyo range? Well, this is the beginning of the Tokyo range. 1, 2, 3, 4, 5, 6, 7, and 8. All right. This is Tokyo's range box. Okay. This is the low for last night's Tokyo range. That's the high for the Tokyo range. All right. Let's box that up. Do we have a tight range? No, we don't. Remember, you want to see ranges or boxes throughout the Tokyo range that are tight and horizontal. You don't want to see price trending or, this type of boxes, okay, throughout the Tokyo range. You don't want that. You want this type of formation, all right, meaning tight and sideways. This time around, we didn't quite get that type of price action. Upon the beginning of the Tokyo session, price moved down, then it moved up. All right, that's not sideways price action, guys. All right, price has been actively moving. We don't want that. All right, the type of price action we want to see is something like in here, price flapping up and down in a rather flat horizontal manner. This time around, you can easily identify that by, again, boxing the price action in the Tokyo range. And if the actual box takes the shape instead of the shape, then that's a not so valid Tokyo range. All right. Now, what about the actual location of the Tokyo range? Well, this is the previous day's range. And, well, as we can see, the Tokyo range did indeed take place at the extreme, in this case the lower extreme of the previous day's range. It didn't took place there, okay? It didn't take place there. It took place at the extreme of the previous day's range, so that requirement is indeed fulfilled. And finally, up on the 3 a.m. London market open. Did we get a momentum breakout early in the morning? 1, 2, 3, 4, 5, 6, 7, 8. This is the high. This is the low. This is the first candle of the London session. This is the second candle, and the actual breakout took place on the third candle. That means that we had to wait till the third hour of the London session. That's a little bit too late for my taste. I like to see the breakouts on the first or second hour of the London session. This time around we had to wait for the third candle. Oh well. I wouldn't be quite sure. Okay, it's certainly not an ideal setup. But at any rate, we had already discarded before this setup because again we didn't have the trend, or at least a clear trend, and most important of all, we didn't have a nice Tokyo box. Okay, the Tokyo range was not shaping up in the way we like them to see. So this is a London breakout. Okay, this is a London breakout. I wouldn't have been interested in trading because this is a low quality London breakout. Okay, you only want to trade, obviously, as usual, you only want to take high probability trades. Well, this was not a high quality setup. Okay. Alright, well, let's very briefly take a look into a few more examples. Sterling pound against the Swiss franc, also 1 hour time frame. First condition, first requirement, intra-week trend. Do we have it? 1, 2 days, 2 red boxes in a row. Yes, we do have the intra-week trend. Second, tight and sideways Tokyo range. Beginning of the day, let me zoom in a little bit more. Beginning of the day, 1, 2, 3, 4, 5, 6, 7, 8. This is the low. This is the high. Yeah, it's more or less, take a look, another beautiful momentum move up on the London breakout. I mean, this thing really happens so fast. I love this type of strategy. Anyway, I would say this is a tight Tokyo range. All right, tight Tokyo range. Price, this is the beginning of the Tokyo range. This is the close of, the close of the Tokyo range is 1, 2, 3, 4, 5, 6, 7. This is the close of the Tokyo range. So yeah, price more or less moving sideways, fairly tight, at any rate within the 50% bands, ADR bands. Okay, this is the 50% ADR bands. These are the 70 and these are the 100. All right, so another requirement that's been fulfilled. Now, number 3. Where does the range take place as per the previous day's price action range? Well, this is the previous day's range, and as we can see, the Tokyo range takes place where? Right in the middle of the previous day's range. This is not the location you want to search for. If it was okay, if it was here, would have been okay. Right there, it's a no-go. Here, it would have been okay too. All right, at the extremes, either the upper extreme or the lower extreme. If it takes place at the middle part of the previous day's range, you don't want to take that breakout. You see that, guys? That breakout there, you wouldn't want to take that trade or that potential trade there. Okie dokie, another live example actually, current market price, euro against the Canadian dollar, 1 hour time frame. Let's look at the 4 requirements. Have we having, a trendy week? Do we have an intra-week trend in place? Well, not really. Even though the daily box indicator is giving us 2 red boxes in a row, actually we can clearly identify just by taking a quick look into the chart that price had been flapping sideways throughout the week. Okay, price has been more or less ranging actually. Yesterday's high, the day before yesterday's high and yesterday's high was in line, okay? Were in line, both of them, and the lows as well, all right? The lows as well, so not really a trendy week, okay? Rather flat. We just got the breakout this very morning, so Not really a trendy week at all. What about the Tokyo range in itself? All right, let's zoom in a little bit more there. This is the beginning of the day. 1, 2, 3, 4, 5, 6, 7, 8. Let's draw the range. Is this a valid Tokyo range, guys? You probably know the answer already. Is this a Is this a valid Tokyo range? Is price moving sideways or is price trending within the Tokyo session? Price is trending, guys. We don't want price to be trending through Tokyo. We want price to be moving sideways through Tokyo. So, nope. We are not going to be trading. We will not be trading. We would not be interested in following the euro against the Canadian dollar this morning for a potential London Open breakout type of trade. Alright, and last example. Actually this video is running too long, so we are gonna make this one the last one for today. Sterling pound against the New Zealand dollar, obviously on the 1 hour time frame, and obviously live, live chart. Okay, current market price is sticking in there. Let's take a look at the requirements. Down day, so yeah, we do have the intra-week trend in place. What about the Tokyo range in itself? Let me zoom in a little bit more. That's the beginning of the day. 1, 2, 3, 4, 5, 6, 7, and 8. So that's the low for the day, and that's the high. Let's box that up. Yeah, that looks like a valid. Tokyo range, doesn't it? Price moving sideways. Okay, horizontally wise, we want to see that. That's a valid Tokyo range. And not only that, not only it's tight and price has been moving sideways, but also it's located at the lower extreme of the previous day's range. You see that? This is the previous day's range price, the Tokyo range taking place at the lower extreme of the previous day's range. So that's another valid, another requirement that's been fulfilled. And finally, do we have an early morning breakout? Yes, we do. We get the breakout. Price moves away from moves away from the upper band of the Tokyo range right away, right as the London market opens up. Take a look at how as London opens up there, we get that momentum push. If that's the high for the Tokyo range, let's see how far this breakout ran for, from 218.20 all the way to 219.17. So that's, if my calculations are correct, 97 pips within 2 hours. Not too bad. Okay, 2 hours because it's 2 hourly bars. All right, this is the 1 hour time frame. So 97 pips in 2 hours, not too bad. Plenty of room enough to make your profits for the day in just 2 hours. All right, that's the beauty of the London Open breakout type of strategy. All right, actually, as I'm looking into the chart right now, I am noticing that yesterday we had also a valid London Open breakout type of trade. Okay, move, congestion through the Tokyo session, and well, we got a continuation move, whereas today we got a move, congestion through Tokyo, reversal move. That's why I was saying before, guys, that you don't have to limit yourself or your trading into trading only in the direction of the trend. You can get valid trading opportunities, okay, such as in here, tight Tokyo range, 3 a.m. Eastern Standard Time, the London market opens the doors, bang, momentum move. This time around, again, as a continuation move. And well, today, in the other hand, we got a reversal move. Both of them are valid, all right? Now, if you've noticed, we've only found two valid London Open breakout setups out of the whole bunch that we've gone through, okay, throughout the last few minutes. And don't be surprised by that, okay? Don't be surprised by that. That's why we have the pre-entry requirements for, okay? We have them there, so we filter out, well, all those setups that are not looking that good, and we end up with just 1 or 2, but eventually that they end up being high probability trades. Your job as a trader is to filter out the less than perfect setups, just to pick one or two, to cherry pick one or two beautiful setups in order to, well, trade high probability setups. And that's exactly what we are doing here with the pre-entry requirements on the London Open breakout strategy. Out of all the euro or sterling pound crosses, do not be surprised again if you eventually end up with just one or two charts that you are going to follow for the day. But hey, at the end of the day, you don't need no more. You don't need no more than one or two charts, one or two setups or trading opportunities for the trading session in order to make your profits as an intraday trader. All right, one high probability trade, one setup, you are done for the day. You don't need no more than that. Okay, so again, I repeat, don't be surprised if after having analyzed all the euro and all the sterling pound charts, all the euro crosses and sterling pound crosses, do not be surprised if eventually you just cherry pick one or two, and those are the charts you're going to be following, you're going to be focusing your attention on for the rest of the trading session. Okay, and that's basically it, guys, for this video. Again, I'm going to cut it here, it's running too long. On the next video we are going to be continue to dig a little bit deeper into this London Open breakout strategy. We are going to be seeing new aspects of this technique, so I'll be waiting for you on the next video.